Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is Monday, and it does look like the market has moved higher, which is an interesting thing. I don't know how long this bounce is going to last. Let's see if I can get the audio right here. Uh, yeah, got a got a loop. Oh, I think we're back. we had a we had a little bit of an audio loop, and boy, oh boy, I tell you, sometimes that well, I have a problem here again. Let me see if I can just mute it. Sorry about this. So there we go. I think we're back, and we're back here now. So apologize for for that. Had an echo in my. I have a feedback problem with this. Streamyard is not the best program in the world. I'm going to probably move to another one, but at least for now, let's get going. I do have the new industry group heat map list on. It's super easy to get on it. Just basically go into the comments, but if you don't see it, here it is, and I just put it up there. This is the new heat map. I'm still very, very lightly invested in this market. It's just a tough market to trade right now, and it really just has not the greatest characteristics going on. But without further ado, let's get into some of the slides here. Let's see if we can see if we can do that. There we go. So let's get into some of the slides. And of course, it's giving me issues again. There we go. So basically, what's happening here is the 10-year Treasury ticked up to about a little bit over 4 points percent. And interestingly enough, and this is what's so strange, the Nasdaq went up as well, but this is why I kind of expect a snapback. The price of oil went down. Basically, what we're just getting is a lot of volatility in the market, and it's really tough to take positions because we're trend traders, and it's the trends are very, very short. They're lasting, 4 and 5 days. So not really a great position to take positions. But oil is trading above 86, which is good because 85 is about the benchmark to where it becomes profitable to drill oil. Of course, there's a lot of federal pressure on not drilling oil. Why, I don't understand it, but that is the way it is. Oil has ticked down a little bit to 86, at 86 on this. So very interesting there. Um, just really just to show you the current holdings I have, I really only have one stock, and I reduced the position on this on Friday, basically to 5% of a portfolio, really, really small. And this, of course, is ExxonMobil, very boring stock. Not exactly, not exactly the way we would like to see it, but it is what it is. Um, we are currently, from what I can tell, we are currently on the second day. Uh, oh, wait a minute. I don't know why it's doing that. It's giving us weirdness here. Uh, okay. Uh, Basically, we're on day two of the fall through attempt on the Nasdaq, and so hopefully, if we can get 2 more days, then we could possibly start coming back into the market. That's one of the reasons I put out the heat map for everybody, and of course, also we'll probably put out the ready list tomorrow. But right now, we just kind of have to sit on our hands and do nothing, and kind of see, kind of see what the kind of see what the situation is. Um, there is a stock that I definitely think you should put onto your ready list right now, and it's again another boring stock. It's Chevron, and basically it's consolidating. This is in a nice consolidation, and let's tick over to the people on for TikTok so they can see kind of what I'm talking about here. There we go. All right. So basically, what we're talking about here is that it's consolidating. It shows basically a 182.50 buy point. Currently, it's at 161.31. Now you can buy it what they call the cheat, and that would be the early entry point at 160. 166.93. Now say, well, Jim, why would you buy it here as opposed to waiting later and buying it? Well, the part of the reason is this can pull back. So we want to see it gather a little bit more strength before we buy it. But I definitely think that we have a potential, buy point basically there at 180, 166.93. So hopefully we'll get 2 more up days, and then we'll get a follow through day. Now, the soonest that we can get the follow through day is going to be on Thursday. Okay, if we get it. Now, we're basically up 2 days. We will see what happens, but that's kind of the that's kind of the way that's the kind of way it's looking here, is that it will be on that on Thursday. So now's the time to get ready with our list, and just go from there. All right, Christina is looking at Tesla. And let's look at Tesla here. The funny thing about Tesla is that I'm not willing to short it. I'm not willing to do anything. But it was up today. I think it's very dangerous to be buying Tesla here, um, because I don't think I think that it's likely to move lower. I mean, it's definitely likely to move lower. So let's take a look at the screen real quick and see what we can see here with Tesla. Basically, the situation, of course, is we're in this downward trend. We're well below the 200-day moving average. We're below the 50. We're below the 21 exponential, and then we're below the 10-day line. It's moved up a little bit here, but I do think and it was pretty strong in after hours. I mean, it's up 221, but basically there is basically there's a floor here, and it's bouncing right off the floor. So um, you know, do I think it's going to move in an upward trend? Possibly. I think it could trade up maybe to the 10-day line, but basically we're still in a downward trend. So I just would not be a buyer of Tesla at this point. It's not looking good. So I wouldn't be long Tesla. Currently, the 21-day line is at 245. That would be my guess for where the ceiling would be. But the overall trend of Tesla is downward. So not a good time to buy it. Now, would I short Tesla? Probably not. And the reason I wouldn't short Tesla here is because there's just a lot of there's a lot of other people shorting it. They could get a short squeeze, so I would just stay away from this one. Um, basically, that's what I would do. Just basically stay away from Tesla, And for right now, it's just again, this is a tough market to trade. I don't think you really want to be in it at this level, and so I just think you got to be super, super careful. So basically, how many follow through days do we need? Where do you want to see the SPY at? Well, that's a good question. You want 4 follow-through days. You want 4 days that are up on 2 or more of the major indexes, either the Nasdaq, the so in the 4th day, after the 4th day, that's what constitutes that's what constitutes the that's what constitutes the follow-through days. So let's take a look at the spider. And that will give us kind of a better idea here. Right, there we go. So here we are in the spider and looking at it, um, looking at it, we're really kind of at a point where we rallied, we rallied up to, about this 360 level, but I don't think we're coming down. I think that we'll see if we get another rally or two, but here's the problem with buying. Here's the problem with this rally. As you'll notice, we did rally today. We have been up. Come on, come on. Sorry. Well, it's not being cooperative. Come on. Yeah, we did rally. Let's see if we can get this other one over here. Yeah, that's probably better. Take a look at it. There we go. So we came right down to the 350 level. We got an up day, and then we pulled back, and then we're starting to make this move. Now the question is, can we move above the reversal line? Well, let's take a look. That's the reversal line. I do believe that we're going to. I have a feeling this rally is going to fail, and it's going to fail right at the 21-day moving average. That'd be my guess. This is why I'm not really getting that excited about this one. But if we get up to about 370, look for a reversal down, and we're almost there. We're at 368. So if we get a fall through day, and I don't know if we will, because I think tomorrow we're very likely to see a reversal on the S&P on the spider. When it gets to about 320, I think it's going to go down. The overall trend of the market still is down. That's why I'm very lightly invested. So, yeah, I mean, I do think that we're gonna get up to the 21-day line. See, that's where it was before. We're at the 21-day line before. This is resistance, really. And as you can see, every time it hits the 21-day line, the spider, boom, it's going lower. So right now, I think we'll get another up day probably tomorrow. But look at the spider to reverse at about 370. And the reason I'm saying this is because the 21-day line is right here at this 370 mark. So that's where you're going to probably look to reverse. I'm getting if we do get a true if we do get a true reversal here, then I'm looking possibly to go in the market. But right now, I'm just really keeping it tight because I think we could get another leg down here very, very easily. All right, let's take a look. Question from TikTok. Thanks for holding here. Let's see. Oil, energy, and lithium. Yeah. Oil, energy, and lithium destroys SPY. I agree. I got SPY 2025 at 300 leaps today at 11. Oh, that's interesting. I don't know if I'd go out that far, to be honest with you, but let's take a let me see if we can answer some questions here. Hi from Somalia. How interesting. Well, congratulations. Thanks for SGH is a chip stock with 1,000 PE. Let's not look at that one. 200 dollars or lower for the Tesla bottom. I think it's lower than that. I think it's about 180 for the Tesla bottom. That would be my take on it. All right, let's take a look at Jeet. Do you watch DXY also when evaluating movement of the market for the day? Sometimes what I'm really starting to look at more and more here is the what they call the stochastic indicator, and I want to show you that. Let's look. 'Cause we're at this. We're on the spider, so I'm going to kind of show you that one. What I'm really looking is the overbought, oversold indicator, and that is the stochastic indicator. So let me just kind of show you what that is. Now, on my charts, and I use MarketSmith, there's a little box that you can check called stochastics here. And this shows a kind of a wiggly line here and kind of see what's going on. Now, what's happened is that we made this move up. This is why it's a difficult market to trade because the market is in a very um, uh, overbought. Oh, it's very overbought right now because it's below 20 on here. You see, it's below 20, so it's very overbought. But every time it turns up, it kind of gets whacked because because it just seems to get whacked. So this is why it's a tough market to trade. It, we were making a nice movement on the spider, and then boom, it pulled back. So right now, I want to see it return to where it's moving, where the stochasticator is moving up, which it is not now. So that's why I'm waiting for that follow through day, because if we can clear this 20 one day line, then I think we have something going on. But right now, it's not there yet, and it's so tough. It's so tough. So I definitely look at the stochastics. Currently, we're in a very over we're in an overbought position, and it's difficult to trade. I mean, this is difficult to trade. This is one of the reasons why I'm basically out of the market still waiting for the right thing to happen here on that. All right, Mike is asking, "Hi Jim, what are your thoughts on BABA?" Okay, BABA for all those that are uninitiated. I'm sure that this is for a lot of people they know what the stock is, but BABA is one of the Chinese stocks, one of the biggest Chinese, one of the kind of biggest Chinese stocks. The problem with the Chinese stocks really right now, and I believe it's been for a while there. There's just so much political problems with the Chinese stock that the if you look at the market here, and what I'm going to do is I'm going to go over here to the monthly chart to kind of show you what's the reality of Alibaba. And right now, Alibaba, if we look at the if we look at the monthly indicator, is very weak. I mean, it's got a relative strength of 18. That's terrible. And it's gone from a high of about 300 up here all the way down, and currently we're trading. Basically we're trading at 76. So we are just this is not a stock that you want to be in if you're a trend trader, because if you get on this train, you're likely to go down. I mean, don't try to pick a bottom, because you're picking a bottom. Wait until the stock turns up. I don't think Alibaba is going to go out of business, but this is not the kind of chart that you want to buy. It's just not the kind of chart you want to buy. Why? Because it's going from high to low, and you can just see that the trend is downward. You might be able to catch a bump here because there are short covers, but generally speaking, you're looking at a stock that's moving lower. So I just would not be a buyer of Baba. I just wouldn't be. Right now, I think you're better off in cash, waiting for the right things to happen. Right now, and this is tough. The resource stocks are where it's at. Let's kind of go over some of the. I want to show you why that is the case, and I want to go over um, some of the things in the slides here that we have. Let's put this up and see if we can get this up here. And let me see if I can get the right thing here. Get the I should have put this right up here, but I didn't today. We're going to look at the heat map. So what I'm going to do here is I'm going to go get I'm just going to go get the, come on, going to go get the link, hopefully. And yeah, there we go. So what I'm going to do here is I'm going to get this link and see if I can see it. Oh, come on. Not letting me do it. Come on. See if, no, it won't. No. See if I can copy this. No. Let's show it and see if I can get that that link from SendFox. Hold on. There we go. So this is a little bit down in the that will. There we go. There. Finally. Finally got over to the right thing. So let's take a look at the heat map here. Um, let's, come on. Come on. Having a little bit of a lag on my machine here. There we go. Come on. Come on. Come on. Hey, having a little bit of bandwidth issues here. Um, there we go. So now I think you're going to be able to see it a little bit better. All right, let's take a look at um, uh, the different areas in the market. Now, of course, we're right now. I'm not that much invested in the market, but I want to show you where when 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 we get a follow through day where we want to be. All right. Currently, the number one sector in the market is oil and gas royalty trusts. Okay, and that's right here. Um, it's right here. Let me get a little bit. We can see it better. It is the oil and gas royalty trust. If we go down the list here, Energy Solar is still pretty good. Bank Southwest, oil and gas transport pipeline is good. And so what I'm looking for here, what I'm really looking for now for this next upturn is the energy sector, but I'm looking for it in the oil and gas refining and marketing area. And so if we go all the way out to today's, um, if we go out all the way out to today's thing, you can see right now that this is the sixth best area of the market. And the notable ticker here is Dino. DINO. So this is the one I want to concentrate on here when we get a reversal. When we get a not a reversal, but a follow through day, and that would happen as soon as Friday. There. So as soon as Thursday, I am looking possibly at the market and looking at a potential for going into a stock that is gonna be in this refining area, and that would be for me, that would be Dino. That's the one that, that's the one that that's the one I'm most interested in. Alright. So, let's take a look at Dino here. come on. It's not going well today. Sorry. All right. Still having issues regarding this, but let's see if we can need a bigger monitor. All right. So here we are with Dino. This is the one that I do think that coming up, I'm looking for a buy point on this one because it is in the right sector. Hopefully, there we go. Having a little bit of issues regarding the bandwidth here. It's a little slow today, and this is why it's not it's not refreshing here. I'm sorry. Oh yeah. Okay, so let's try to get this done. Thanks for holding on here. All right, let's just try to answer this question. Why is the 21 day so important to the trend? The reason the 21-day line is so important is because that is where the programmatic traders are keyed off of. So it's an exponential program. It's an exponential line. So basically, the it tends to be about 2/3 of all the stocks are traded programmatically. So that if the stock price goes to an index line, then an action is taken. Typically, and this has been back tested by Mike Webster, by the way. I don't know if you follow him on Twitter, but very interesting guy. This is the most common line that they trade off of is the 21-day line. This is the reason why I look to buying as close to on a trend. If the trend is up, this is why I'm looking to buy as close to that 21-day line as possible. Why? Because this is typically where this is where it's keyed in, and so that's why I'm always looking at that 21-day exponential moving average. So it's that's definitely why I look at it so much. All right, your thoughts about Baba? We did Baba. Okay, well, I guess we're pretty much at the end here. Let's see if we can take two or three more questions from TikTok. I wish I had more bandwidth today. It seems like I'm having the bandwidth issues. Okay, let's see. What stock is this? Not sure. Looking at this one. Um, Oil, energy, and lithium destroys SPY. Absolutely does. That's a very good point that you're making there about that. The reason it does, the reason that higher interest rates are so critical is because the higher the interest rates go, the more the tech stocks have to make in terms of their PEs. They have to be much more profitable. Most growth stocks, i.e., tech stocks, typically are not that profitable. They're looking to future earnings. So sales growth is more important than actual profits. Now, when the interest rates go up, the market demands profits, and when the market demands profits, that's where you have that's where you see the commodity stocks doing well. Why? Because when they pull something out of the ground like oil, it's immediately saleable for a certain profit. It's a known deal. We're not looking to the future. So as interest rates go up, typically the value of commodity stocks goes up as well. So that's the reason why. So that's a great question. Great question. Okay, probably last question here, and that is da da da. Is 200 or lower the Tesla bottom? I don't think so. I think it's going lower, possibly as low as 128. Now remember, I was around back in 2000 when the stock market went down. I sold because I'm a cancel trader. If anything goes down more than 8%, I'm typically a seller. I sold my stake in Microsoft. It took 17 years for Microsoft to get back to where it was in 2000. It took from December 1999 basically to May of 2017. Now, I started buying Microsoft again in 2017, but it took that long to get back to where it was. So this is why, with Tesla, I think it's going to be a market performance stock for a while. I mean, I don't think it's going to go up to where it was. I think that's kind of it's been there and it's done that kind of thing. So I don't think it's likely to get back to where it was. I want to show you an um, interesting chart in that I want to show you Microsoft over a long period of time. So let me see if I can make that happen. So let's go to the monthly chart and Microsoft. Right? And I want to show you. Take a look at this chart. Okay, this is the chart of Microsoft basically from 2002 all the way to the current date. So, but if we go back and I want to show you this because this is very interesting. If we go back to 12 31 1999 and we look at Microsoft, um, going forward. Oh, that's 1999. Okay, so you can see what happened with Microsoft. It from its beginning to 1999, it was almost it was almost straight up. But then, starting basically in 1999, come on, trying to get it to okay, come on. My internet connection is not very good right now, and so I'm having issues regarding that. So now, if we look at so now if we look at Microsoft, come on. So now if we look at Microsoft, you see all the way, and you can't really see this, it basically took all the way, and I can't really show it on my chart, but it took all the way basically from back here to reach the point where it had come up. Then it took a nice run from 2000. So basically 2017. Come on. Yeah. So I can't really show this on the chart because I'm having trouble bringing this chart up, but it basically was here for 17 years, and then it started to move up. Now with Tesla, we have a similar problem. Tesla made its high basically in 2021. Okay, it made its high. It's very likely that it's not going to get back here probably for quite a few years. That would be my guess. Because I do believe that this was the top. The top was made basically back here. This is the top. And I don't think it's going to move higher than this. So essentially, right now, Tesla is dead money. And I know that's hard to believe, but Tesla is essentially dead money. I don't think it's going to move past where it is now. I think it's an overall long-term decline. And so I think you got to be very, very careful if you invest in Tesla right now. There will be new leaders when the market turns upwards, and we may have to wait a year for that. But when the market turns upward again, there will be new leaders. But right now, I don't think Tesla is one of the leaders anymore. I think it's become a market perform stock. So we're going to have to look for other candidates. There is one that I've been looking at, Shockwave Medical, that might be a leader, but we'll see. Anyways, if you want to get a look at those alerts, the heat map, just go just go into the comments, and it's at the top, and just use that link, and you'll be able to see which sections of the market are doing the best. If you're watching on TikTok, just go to the link above, click on the thing that says beacons, and you'll be able to click on the link to see that heat map. I'll be back tomorrow, but until then, please like the show. Always like it when you like the show. That helps us a lot, getting out there to a lot more people. So please hit uh, you know hit that like button. Please, don't do the small one like I did. Do the big one. So hit the like button, and also go over to DallasTradingFloor.com and get on the free email list. I'll be back tomorrow, of course, at 5. Hopefully, I'm going to have a little bit more bandwidth. It's going to be the systems is going to be working a little bit better. I can get the charts on better, but I'll be back, and happy trading.